Welcome everyone to today's Merchant Risk Council webinar. My name is Tom Donnelly with the Merchant Risk Council. I'm the Managing Director for the Americas. My role is to help introduce the session and moderate questions and answers at the end. Specifically today, we're going to be focused on SecureBuy and their automated risk-based CNP fraud prevention system. SecureBuy is a signature link company to contribute intellectual property and educational material like you're about to see today, but also to make connections within the industry and educate you as to their services and what they could do for your business. Our presenter today is Greg Wooten. Greg is our main contact with SecureBuy, and Greg, if you're ready to get started, I will hand it over to you for today's presentation.
I am. Thank you, Tom.
Great. Welcome.
My name is Greg Wooten. I'm the Chief Executive Officer for SecureBuy. On the webinar today, I also have James Packer, our Chief Operating Officer and General Counsel, and Jason Napsky, our Director of Technical Services, is also on the webinar, and we hope to answer any questions you may have after the webinar. The basic intent of SecureBuy isn't just to deal with CNP fraud. It is to also eradicate the manual review process that has become associated with dealing with payment fraud. And from our perspective, this has been a long road. It's taken us 11 years to deliver SecureBuy 2.0 and millions of dollars. And we're all ringleaders in our own little circus, and we wanted to make sure that we addressed as much of the pain points as possible that people like yourselves deal with day in and day out in managing CNP fraud and the associated expenses. And we've reached out and dealt with sponsoring banks, acquiring banks, processors, enterprise merchants like yourself, consumers. We have an extremely extensive board of advisors, and I think one of the best management teams in the industry. And we've taken all of the inputs that we've gotten over the years and mixed that with what we feel to be some of the best technology in the industry to create SecureBuy 2.0. 2.0 is just certified by Visa, MasterCard. We're in the processes of finishing up testing with American Express and should be complete within the next few days, and working with Discover to do the Diners Club certification. The testimonial we have up on the screen from Sean Henry is one that I'm particularly proud of. Sean's on our board of directors, and up until May of last year, he was the head of the cybercrime division for the FBI, and one of the most coveted speakers in the world when it comes to cybercrime and payment fraud. Sean was actually just the keynote speaker at MasterCard's Global Risk Management Conference in San Diego a couple of weeks ago, and I worked real close with Sean to get us the tactical information that we felt that we needed to deliver the solution the industry was looking for. And with that, cut to the chase and get on with the presentation. And just at the 10,000 foot level, we used CyberSource's most recent data for this presentation. We thought it was timely. We know the MRC works closely with CyberSource, and we've always coveted their data as being pretty accurate, some of the most accurate in the industry, actually. But again, just going over the basics of the most recent report, the average enterprise merchant's using roughly 5 fraud tools to purify that payment space and minimize the number of transactions that the analysts have to review on a daily basis. 25% of the orders are being manually reviewed. The merchants that we talk to are, it's pretty much anywhere from 5% to 30%, depending on industry type and merchant type. 5-minute average review time for a transaction, MRC merchants seem to have streamlined that process as much as anybody in the industry and have a 5-minute average. A lot of the merchants that we talk to, it's anywhere from 5 minutes to as much as 40 minutes, depending on the size of the ticket and the concerns they may have. So it's a little all over the board, but for MRC merchants, it's 5 minutes. So building an ROI around what that review process is costing you per transaction, based on a $40,000 a year average base salary, which seems to be pretty much the norm in the industry right now. It works out to $1.87, but that's giving your analyst staff 100% proficiency, and any additional time that they may take reviewing transactions or a loss in productivity, that starts to escalate. Where you're spending your money is been pretty much a constant. It's down a little from the last report we saw at 52% for the human capital. Your external tools, you're spending about 29% of your annual budget, and then 19% of your budget is going towards your in-house tools and systems that you use to manage your fraud. As far as the hidden costs of fraud, I've been an advocate of e-commerce since the early 90s. I was the first e-commerce manager at AT&T, and one of the things that disturbed us early on was as payment fraud started to escalate, the human capital element, which referred to as the manual review-centric process, started to manifest itself within e-commerce. And the strong attribute about the return on investment with e-commerce is the automation. And when you start interjecting manual review of transactions into that process, you destroy the ability of scaling that commerce platform at will. And that was its strongest attribute that was so attractive when businesses started looking at it to automate their ordering systems and selling online. And over the years, I think there's kind of been a bell curve process in that to where it's pretty much as streamlined as it's going to be. There's some great technology out in the marketplace for filtering transactions, but at the end of the day, the things that eat into your bottom line is the loss of automation. One of the current tactics that's been used more and more prevalently in the past few years to manage loss and chargeback percentages financially, as well as keeping your percentages under the card brand regulations, is proactive refunding. And that's, from my perspective and a lot of people that I talk to, that's kind of offensive to a large degree, because you're basically just handing the fraudsters the money rather than trying to combat them. There's legitimate refunds and credits in the normal course of business, but in late, there's been a trend to just go down the path of least resistance and just basically give them the money rather than fight a chargeback or deal with the back-end processes that are associated with it. One thing that's been near and dear to SignatureLink's heart, our parent company, holds the patent on the biometric signature capture for online commerce, and it's one of the few tools in the industry to fight cyber shoplifting and friendly fraud, because of the attributes of a friendly fraud transaction are identical to a clean transaction, and there's really no way to distinguish a friendly fraud transaction from a technology standpoint. So the best thing that you can do is manage it more from the legal perspectives. There's nothing more coveted in the legal environment than the consumer signature, and that's why one of the first few questions on a retrieval request is, do you have the customer signature on file? And online merchants, CMP space has been disadvantaged greatly in the past few years with not having access to that technology. And then last but not least, the false positives that just go with the territory. Your analysts use the technology you have in place, do the best job they can, making an educated guess whether a transaction is good or not. and effectively you end up dealing with on average, industry average is a 7% false positive in that space. The SecureBuy 2.0 solution is a cloud-based solution that we deploy at the shopping cart level rather than at the payment gateway level, and we do that for a lot of different reasons. Primarily, it's more efficient at the shopping cart level. We're able to control your payment processing expenses and terminate transactions up front rather than backloading your back-end infrastructure with unnecessary transactions. But 2.0 at the 10,000 foot will lower your overall cost of payment acceptance. It reduces your financial risk. It eliminates manual review, and again, as I indicated, that's one of our goals, is not just to manage payment fraud, but to eradicate payment fraud along with the manual review process that destroys the ROI associated with e-commerce. It reduces chargebacks. It improves customer confidence. All of the feedback that we've got from end users, they're very impressed that merchants are deploying technology to protect their interest. It increases conversion as a result of increasing their confidence. And the numbers that we're seeing is that we can reduce your overall fraud management budget by as much as 75%, and that obviously varies, from merchant to merchant depending on what your infrastructure is and how large your organization is. SecureBuy 2.0, we are kind of looking at next generation technology, or third generation and a second generation environment. There's been a lot of advances recently in the risk-based authentication space. Visa and MasterCard have been advocating risk-based authentication for the last couple of years. They've come out with a couple of good products, actually outstanding products. Visa's new VCast and MasterCard Secure Code are exceptional products. We kind of play in that space in regards of we have one foot on either side of the technology. We're compatible with existing 3DS authentication technology as well as the new platforms that are being put in place. The best way I can describe it is that the risk-based authentication takes place at the issuing platform level. There's interchange advantages as a result of that, whether a consumer is authenticated or actively authenticated or passively authenticated. The risk of that transaction is assumed by the issuing bank, and the merchant is granted an interchange discount. In the absence of the new platforms, whether it's Visa or MasterCard, our risk-based authentication platform does the heavy lifting and provides a liability or risk shift, if you will, to the issuing bank on actively authenticated transactions that have an elevated risk. Our passive authentication engine allows the merchant to set their own risk threshold, and anything that passes that risk threshold is presented with active authentication. And in that process, you do receive interchange advantages and a liability shift. Just the basic anatomy of 2.0 is passive authentication, active authentication. Our patented biometric signature capture is an optional component, and our inline terms and conditions is an optional component that's FTC and CFPB compliant. The end result of the technology that we have there, and another technology that's really not on the screen here, is called screen scraping technology that we have a patent pending on, that effectively takes a snapshot of exactly what the consumer sees at the point of acceptance and creates a forensic document. It kind of removes the transaction from that he said, she said environment that takes place sometimes with purchase disputes. Consumers sometimes will indicate that a particular banner or message was being displayed to them at the time of checkout, and the merchant really doesn't have any means of disputing that particular claim by the consumer. With our application, you actually have a PDF. Those are a forensic document that has a true chain of custody to it that can be returned to the issuing bank to prove out exactly what the consumer signed and what they consented to in the transaction. All of that's backed up with our trans-exam chargeback management system is integrated within SecureBuy 2.0. And again, it just makes it easy for the merchant to be able to pull up a given transaction to review or share with their consumer, issuing bank, whatever the intended purpose may be. Our passive authentication scoring engine is definitely next generation technology. We partnered with Threat Matrix as well as deploying a lot of our own technology. It's transparent to the consumer. We have the ability of executing and bashing over 80 different attributes, the combination of which runs into the trillions. Actually, I think it's 6 trillion. That will determine what, a score, risk score. You set your threshold to where you want it. Based on that threshold, the transaction either goes down the fast lane or it's presented with active authentication. And this is the point where now in your process where you're probably pushing transactions to your analysts for manual review and further investigation. And to keep that automation in there, the active authentication and associated liability shifts and interchange advantages and things are just something that your analysts can't provide your enterprise. There's no guessing. The consumer has the ability to authenticate themselves rather than the analyst trying to guess whether a transaction is good or bad and dealing with that false positive percentage. As far as the technology is concerned, shifting the risk in the fraud space is definitely the holy grail of fraud in trying to manage that environment. Again, the interchange advantages, you're almost rewarded for your high-risk transactions. And zero manual review, that's where 52% of your budget's going. It's real easy to draw a conclusion of what the technology can do for your operational budget and where you might be able to spend those funds improving your operations other than manually reviewing transactions. Something that's kind of been creeping up in the industry more and more of late are the new guidelines by the FTC and the Consumer Financial Protection Bureau. Their guidelines now deem pop-ups and links to your terms and conditions and refund policies to be a deceptive trade practice. And that just opens the back door for fraud. Having your T's and C's in line in the checkout process has been something that a lot of acquirers have had in their merchant service agreements for quite some time. There just hasn't been a lot of enforcement around it. An interesting case that came up with the Zappos breach. They wanted to attempt to limit their liability from that breach and use arbitration. And the courts effectively threw out their request to use arbitration because they had the ability of altering their terms and conditions on the fly, and there was no way for them to prove up exactly what their terms and conditions were for any given transaction or in any given day. Our technology freezes the terms and conditions for a transaction on a transaction-by-transaction basis. So if you did want to use arbitration as a means in which to limit your liability, that's an option. Again, the biometric signature capture and the T's and C's injection are both optional technologies that we provide to you. The signature capture is just an absolutely outstanding piece of technology from the standpoint of it's platform agnostic. It'll work with any platform, mobile, tablet, computer, any browser operating system. Jason's done an amazing job with creating the application, as well as the quality of the signature is better than anything that I've ever seen in a brick and mortar establishment for signature capture. You've probably, utilized the technology and Square, Intuit. A lot of companies out there are deploying it in the mobile space. It's extremely beneficial in the card-not-present space for creating that coveted, human biometric signature is the ultimate. Outside of card brand rules and regulations, it is probably the strongest tool that you'll have in your bag to combat fraud. The sales draft technology that we've created, again with the screen scraping technology, the biometric signature capture, the terms and conditions injection, creates basically a third-party certified sales draft, first in the industry. MasterCard actually has in their regulations that a card-not-present merchant can't be asked for an original sales draft because one doesn't exist for e-commerce. We were proud to be the first one to introduce that and create the first original sales draft with a true chain of custody. And just another kind of crowning jewel on the technology. The platform, SecureBuy itself, again integrating it at the shopping cart level, is a payment-neutral application. There's a lot of attributes about SecureBuy and the active authentication that we deploy for acceptance of plastic. But when you get into alternative payment methods, some of those applications, PayPal, etc., they have their own authentication schemes, and we kind of step aside in that process, but still allow you to do the T's and C's, injection, passive authentication, biometric signature capture, and the forensic screen scraping technology is all present for those alternative payment methods. This is an overview or an example of the process flow of 2.0. It may look a little cluttered. This is an example of one deployment. Depending on your given shopping cart, you could mix up a little where different elements are invoked or not, but this is primarily a typical process flow where a consumer enters the shopping cart. They're presented with passive authentication. If they pass authentication, they continue down the fast lane. They're presented with the terms and conditions signature capture. They review the order submitted. It goes onto the payment gateway. Merchant has the ability of just archiving that forensic sales draft, or they can also email it to the consumer. If the transaction fails passive authentication based on attributes within the transaction, and again, passive authentication is not used to terminate a transaction, but just to assess the risk level. Based on how you have your risk level set, it would continue down the active authentication 3DS checkout process. Something that we do that is a little bit different than most 3DS applications in the industry, besides being risk deployed, is we do give you the ability of deploying it with rules. Some of the older technology out there was using rules-based deployment as opposed to Visa and MasterCard's new risk-based deployment. But there's a lot of merchants around the world that have been using 3DS on every transaction where it's been mandated in certain parts of Europe, Canada, and they're still manually reviewing transactions. And one of the reasons that they do is they're still receiving chargebacks and fraud on authenticated transactions. And we recently entered into a strategic partnership with Moneris. And Moneris is a partnership between Royal Bank of Canada, Bank of Montreal, and Harris Bank here in the U.S., as well as they own the U.S. franchise for Diners Club. And working with their IT team, Jason was able to get to the bottom of something that has kind of been plaguing that space. And there's about 20 different response codes between 3DS and the payment gateway that kind of have to mash up or mesh, if you will, for the issuing bank to truly take on the risk from that transaction. And you can authenticate a transaction, and the issuer might not take on the liability for that transaction. And subsequently, if there is a dispute, you're going to end up managing a chargeback on that transaction. What Jason's done in working with Moneris is he's developed a 3DS decision engine that we have a patent pending on that takes the 3DS response codes and bashes them against the gateway response codes. And within our SecureBuy 2.0 application, we give you the ability of only accepting those 3DS authenticated transactions where the issuer truly took on the liability for that transaction. So at that point, if it's a partially authenticated or an attempted authenticated transaction that the issuer or card brand didn't accept the liability on, we present you with an opportunity to either terminate that transaction or give the consumer an opportunity to use another card type or payment type at that point. And again, an overview of the positive attributes, from a financial perspective and management perspective, is our 3DS decision engine is the only one that we're aware of in the industry that allows to automate that process and truly keep everything on the fast rails. No need for manual review. The interchange discounts for any authenticated transactions. And the industry's only certified legally binding sales receipt for e-commerce creates an indisputable proof of purchase, which at the end of the day is really what you need to increase your chargeback win ratio. And with that, I think we can move on to Q&A. We have a little more time than we anticipated, so I hope we have some good questions that we can address.
Okay, Greg, great. Thank you for the presentation. I'm getting the question window open here right now. We've got some great questions coming in from the audience. So let's see. The first one here, Greg, I'll send them to you, and then you can forward to James or Jason as appropriate. You mentioned the product is coupled with threat metrics. I'm curious as to whether you're able to screen and score for buyers with IPv6. I'm not even sure I know what that is. Do you know what that is, Greg?
No, I would digress to Jason to take that one on for us.
So yeah, the IPv6 is just the actual extending of the IP addresses for more IPs getting access to the internet, and through Threat Matrix we're able to do the same thing with the IPv4s as the same with the IPv6 as well. So we're able to accomplish on both IP first and second generation IP addresses. Okay.
And Greg, here's a question that I know you've heard before, but it's coming in today, so let's go ahead and cover it. How does SecureBuy's risk-based authentication differ from other 3D Secure solution products?
Again, I'll let Jason take that one on.
I'm sorry, my phone was breaking up. Can you repeat that one more time, Tom?
Yeah, you bet. So the question is, how does SecureBuy's risk-based authentication differ from the other 3D Secure solution products that are available?
So we've coupled our passive authentication engine, which basically assess the risk level of the transaction along with 3D Secure. So typically in the other 3D Secure implementations, it's usually an all or nothing. Either the merchant is using 3D Secure on all their transactions, or they're not using 3D Secure at all. The way we've coupled and added our services together is that on those transactions that are high risk, that 5 to 7%, depending on what field the merchant is in, maybe it's 10%. Those high-risk transactions are the only ones that we're sending through to 3D Secure. And what the thinking is those ones that have been deemed as low risk, we don't need to pester your end consumer, the end user that's trying to check out with 3D Secure. on those transactions that are low risk. Only the ones that are high risk that you would normally put a human on to manually review would go through the 3D Secure active authentication method, if you will. So that's the main difference as far as what the end user sees. And then what Greg had talked about earlier is the second part of it is during credit card authorization, you get back response codes from the issuing banks, and those response codes that come back through your gateway, like Greg said, tie back to whether there's a liability shift, whether they actually accept the authentication through 3D Secure. And so we couple our engine in with there as well, so that the merchant can choose to take those ones that come back as the issuing bank is not accepting liability. Then the merchant can take action on how they want to process that order. So, the front end from what the user sees, and that we limit 3D Secure to only the high risk, and the back end helping the merchant ensure that those ones that they are going through 3D Secure, that they're processing those ones that are that they're actually getting the liability shift and the interchange discount on.
Great, thank you. Next question is from a large multi-channel retailer based in the States. Their question is, how does this product eliminate manual review?
Well, from the standpoint of, in the payment process, you use fraud screening applications to purify your payment stream, and then you push a percentage of those transactions in front of fraud analysts to make an educated guess on whether it's a good transaction, and you either fail the transaction at that point or you let it pass. With SecureBuy, instead of pushing the transaction in front of a fraud analyst, you present active authentication to the consumer and allow them to authenticate themselves, and instead of shades of gray, it's black and white. Either the consumer can authenticate themselves directly with the issuing bank, or they can't. And in most cases, it's they don't have permission to use the card because they don't have access to the data that's required to authenticate themselves. So you automate the process by allowing the consumer to authenticate themselves in real time, as opposed to putting the transaction in queue for an analyst to manually review.
Okay. Gentlemen,
the best example I can use is, even I'll use, personal experience. I had this last weekend where I purchased two 13-inch, 18-inch tablets from Dell online, and it was the weekend, and kind of a $3,500 ticket amount, and they have a rules-based deployment of 3D Secure, and I authenticated myself with Wells Fargo, I have one of my personal accounts with, and I accurately authenticated myself, and the transaction concluded, and I got my receipts, and then I got an email a couple hours later saying there was problems with the credit card data in the transaction, and they gave me a number and an extension to call, which was a fraud analyst overseas, and she had told me that there was a problem with the transaction, that Wells Fargo had alerted them that it was a suspicious transaction, and I said, well, that, that's good. I made the transaction. I approve it. And I said, but out of curiosity, I'm in the industry. I said, I accurately authenticated myself with Verified by Visa. Why are you saying Wells Fargo said that there was a problem with the transaction, that there was an elevated risk? And she said, oh, well, they just tell us to say that. They push these transactions in front of us randomly because they're still having to deal with chargebacks, even though we use Verified by Visa. And it plays back into what we were discussing with our response engine, is, automation is the name of the game. There's a lot of technology out there to authenticate consumers. And again, working with the industry, I worked real close with Bob DeRodes, which headed up First Data's global technology platform for years. And there's really only one way to accurately authenticate a consumer with plastic where you're going to shift that risk, which is the ultimate goal at the end of the day. You don't have to lock down your passive authentication, fraud screening filters, to block countries, to create white and black lists. If you use those simply as triggers to elevate the threat level or risk level with a transaction and present active authentication to that end user, you're going to maximize your sales as much as possible rather than potentially locking out legitimate sales. And you keep the process flow, with 100% automation.
Okay, great. Just going back through these other questions here. So this was kind of a multi-part question, and I had to have some clarity to make sure that we were getting to a very answerable question. I think I responded saying that this is going to vary by merchant, but Greg, the question is related to how this product eliminates fraud. How much fraud are you able to stop? How does the system measure up compared to the industry standards that are discussed? And so maybe a case study or give a couple of examples, because we know, depending on the type of merchant, what kind of fraud they had before, that's going to affect the results after they implemented SecureBuy. But how do you answer that question when a merchant asks?
Well, I mean, using specific examples is difficult. I mean, we have NDAs in place with all of our merchants, so we really can't disclose any specific names. But we're all ringleaders in our own circus, and in that environment, the customer is always right. In this case, the customer being the merchant, it depends on deployment. If they use all of our technology as intended, we strongly feel it outperforms anything in the industry. With that being said, the biometric signature, inline terms and conditions, injection are optional features. Also, we give them the ability of accessing back-end rule sets that kind of line up with their internal business rules. So, we give them the ability of customizing it. If you use industry best practices, if you will, how we would configure the application out of the box, bar none, it will produce a better result than what they're doing now. And, we highly encourage anybody to do A/B testing. We're more than willing to have a shootout at the OK Corral with any company in the industry. If somebody creditable wants to sponsor that, we'd be the first one at the table.
I'm glad I met you, Greg, so now I can imagine, a 6-gun on your hip, ready for the shoot. That's good. That's a good image. Okay, so follow-on question then. So we have a merchant here whose payment processor does not support 3D Secure. Could they still utilize the solution and the services that SecureBuy 2.0 offers?
Right. I'll let James, our general counsel, address that one.
All right. I just want to make sure that everybody can hear me. Sounds like you probably can. So,
yeah.
Obviously, not every payment processor supports 3D Secure, but the way that we can implement the technology as a result of the technology being segmented allows for the merchant client to use all the other features of SecureBuy 2.0 that are not available if 3D Secure is not supported by the payment processor. Now they can still, for internal purposes, obviously deploy 3D Secure in its methodology as we deploy it, but it would be for internal use, and they would use that data obviously for their own purposes to do somewhat of a secondary authentication, for example. But if the payment processor does not support 3D Secure, then you're essentially using the passive authentication, you're using the biometric signature, you're using the inline terms and conditions, you're using the screen scraping technology, which creates the industry's first and only card not present signed sales receipt, and then you obviously have access to the PCI compliant data vault, which gives you those documents available if needed down the road for dispute purposes. So.
Okay, fantastic. And the rules for disputes for chargebacks have been changing. Maybe you could continue on that vein and say, how being a client of SecureBuy might be beneficial or helpful in that regard to win more chargebacks.
Well, one of the most challenging areas, again, is what's referred to as clean fraud, where, account takeovers take place, and that kind of, renders something that's been advocated for years, and, using big data has been an effective method for controlling fraud in the past. Most of the MRC merchants are very large merchants, have very extensive databases, with deep reach into that customer information, and knowing your customer has always worked well in the past for controlling fraud, but in late with account takeovers, that data is kind of used against the merchant. So in cases where they're using data that's been obtained either through compromising a consumer's email account, or compromising their computer, or accessing, hacking the back end of the merchant's platform, that data has generally been used to allow the consumer into the fast lane in the past. And with account takeovers and having access to that information, it's dangerous to do that now, and it's becoming more and more so. So having applications in place that look at attributes of that consumer in real time and determining, the basic information, these days in second-generation technology is, machine IDing, true GeoIP location, all of the attributes about IDing that machine, and the attributes about the cards that might have been used, as far as the velocity of them, as they're based on time and dollar amount, and using big data at the merchant level. In our application, you're looking at shared data amongst about 1,400 merchants that is not based on back-end information that can be accessed through account takeovers. So, that's one method. The other is, again, friendly fraud is extremely difficult in dealing with. And without the consumer's signature, it's very difficult to combat it. The issuing banks certainly recognize it. We were on the MRC's call over the chargeback rule changes, and I think it's apparent in the MRC's an agreement that biometric signature capture for online transactions is compelling evidence in representments. So we bring a lot to the table in that space. The analysts on the issuing bank side are, they're people just like you and I, and they have limited time to review transaction disputes. The easier you can make it for them by presenting compelling evidence in a clear, understandable manner that has a chain of custody to it, the easier you're going to make their job.
That's great. Greg, I put out a last call for questions thinking we'd have one more, and 3 more came flying in. So
excellent.
Yeah, fantastic. Great interest in your product, great presentation. It leads to a dynamic question and answer session. Okay, so this person joined the call late, so apologies if you covered this already, but I think it's worth revisiting. How do you avoid false positives or rejecting good customers who are flagged as fraud and should not be?
Excellent question. That's where active authentication comes in. If there's attributes about that transaction that have pushed that transaction over your threshold, if you will, where you would normally push it in front of one of your analysts to review, you give the consumer the option of authenticating themselves directly with their issuing bank. They're only presented with authentication information they themselves have supplied their issuer, and it's really easy in that space. Consumers are well trained, have mental muscle memory for authenticating themselves with their bank, with your back-end account access. They're very accustomed to it. I would much prefer authenticate myself as you know, most of the feedback we've gotten from consumers that we used in focus groups, they prefer to stay in the fast lane and authenticate themselves rather than having their orders delayed. And I mean, the ultimate insult is obviously to have a good order rejected. You know, like my example with Dell. If I hadn't called and given them verbal confirmation that it was me, they would have rejected the order, even though I actively authenticated myself with Verified by Visa.
Great. All right, so we have 2 more questions, Greg, and we'll see if this inspires any others. We still have a few minutes before the top of the hour. Can SecureBuy 2.0 be used for non-card-based payment types? For example, non-card-based credit?
It would be my belief so. Jason, would you like to take that one?
Yes. So the SecureBuy 2.0, James had touched on this earlier in one of the previous questions. You know, there is it's a bundle of features, and those features can be taken independently. So in the non-credit card space, as far as accepting payments, all the other technologies other than the 3D Secure piece can be used. The passive authentication, the signature, the sales receipt, the different technologies outside of the 3D Secure can still be used, and like James touched on, they can be they can be put in a la carte, and so you can put in all except for the 3D Secure. So I guess that's the long answer. The short answer is yes, we can be used outside of credit card payments for other payments like check and other ones as well.
Great. And I've got one more question, Greg, and then we'll have you provide some closing comments here. Does the SecureBuy offering include payment gateway? If not, who are the few gateways that you connect to?
Well, excellent question. We stay out of the gateway business per se. I mean, we're like everybody else in the payment industry. We try and be Switzerland and not taint ourselves by getting into an area of businesses that is not our core competency. Presently, we just finished coding to Moneris's E+ Select Gateway, CyberSource, Authorize.net, as well as several others are in progress right now and should be completed within the next couple of weeks. 2.0, as we've outlined, it's integral that we do integrate with the payment gateway to make sure we give the merchant the ability on authenticated transactions of only accepting those transactions where the liability shifted to the issuer. And for that reason, we have development plans to integrate to every major payment gateway in the industry, as well as, you know, the shopping carts are somewhat of a challenge. You know, large enterprise merchants run their own custom platforms or semi-custom platforms, and we just do custom integrations for them. But for, you know, the mid-sized merchant market, you know, they'll use a Magento or an X-Cart or, you know, a more conventional shopping cart, and we've been working on developing extensions for those for quite some time and have them in place for X-Cart and Magento, but we're also working on Demandware and Drupal and quite a few other mainstream shopping carts. So it's our goal at the end of the day, no matter, you know, whether the merchant's running a custom platform or an out-of-the-box solution, that the integration is an easy and quick process for them. You know, Magento, for instance, the integration process is 2 minutes. So that greatly speeds up that process. But the custom integration, it just depends on the platform and the access we have to the code. It can run anywhere from a few days to a couple of weeks.
Great. I was just checking here. The questions have been exhausted, gentlemen. Greg, how about a couple closing comments, and we'll wrap up today's webinar.
Well, again, I mean, we really appreciate the opportunity to talk to you folks that are on the call today. You're the cream of the cream, you know, when it comes to managing fraud. The size of your companies are generally enormous, and you have, you know, quite the task to manage, and we'd love to work with you and be a part of that process. At the end of the day, it's our goal to help stabilize commerce in any way we can. I think we've done the best job we could. We've taken our marching orders basically from the industry, and every expert that we could lay our hands on has had input into 2.0, and we really look forward to feedback.
Fantastic. Well, Greg, Jason, and James, thank you for your time today. There's the SecureBuy website here on our screen. Additionally, you'll get follow-up from the MRC related to this webinar. Very soon also we'll be posting registration for our Boston conference at the end of October and our Lisbon conference in September, so look for those. Thank you, SecureBuy team, for your presentation today, and please join us for upcoming webinars as well. Have a great day, everyone. Take care, and goodbye.